FTX, the embattled cryptocurrency exchange, has filed for bankruptcy in the United States, seeking court protection while it seeks a way to return money to users. Former CEO Sam Bankman-Fried has also stepped down, according to the company. It is a massive turn of events for the 30-year-old, who previously led the world's second-largest cryptocurrency exchange. His FTX empire has collapsed in less than a week, shaking confidence in the already troubled crypto market. Prior to the crash, Mr. Bankman-Fried was a rising star in the crypto scene, drawing comparisons to investment tycoon Warren Buffett, with a net worth of more than $15 billion as recently as Monday. However, rumors that FTX and other firms owned by Mr. Bankman-Fried were in financial trouble earlier this week prompted a large number of customers to try to withdraw funds from FTX, an exchange used to buy and sell digital tokens. Faced with a cash crunch, Mr. Bankman-Fried attempted to organize a bailout, but it fell through, leaving FTX scrambling to raise billions of dollars and many customers unable to access their funds. The company can continue to operate while restructuring its debts under court supervision by filing for Chapter 11 bankruptcy. The goal, according to FTX, is to begin an orderly process of reviewing and monetizing assets for the benefit of all global stakeholders. The FTX Group has valuable assets that can only be administered effectively in an organized, joint process, said new CEO John J. Ray III, a lawyer who previously worked at a venture capital firm and has experience with high-profile bankruptcy cases. FTX estimated in the filing that it had between $10 billion and $50 billion in assets and liabilities, as well as more than 100,000 creditors. According to the statement FTX shared on Twitter, the proceeding involves FTX as well as Alameda Research, a trading firm founded by Mr. Bankman-Fried, and approximately 130 affiliates. These include FTX's operations in the United States, which Mr. Bankman-Fried said were unaffected on Thursday. This does not necessarily have to mean the end for the companies or their ability to provide value and funds to their customers primarily, and can be consistent with other routes, Mr. Bankman-Fried said. Mr. Bankman-Fried had a high profile in the crypto industry and beyond, frequently representing the industry before regulators. He was a major donor to Democrats in the most recent U.S. elections and had gone on an advertising blitz in the country, enlisting celebrities like Tom Brady and Gisele Bündchen to persuade the public that cryptocurrency was a worthwhile investment. However, as he grew in prominence, questions were raised about the connections between the various parts of his business empire, as well as potential conflicts of interest between FTX and Alameda. The problems at his companies have harmed the rest of the crypto market, with currencies such as Bitcoin dropping 20% this week, and put pressure on other companies to demonstrate financial strength in order to stay afloat. Several companies in the sector had already failed or were on the verge of failing earlier this year, following a sharp drop in the value of digital assets. Because of the situation, BlockFi, another cryptocurrency firm with ties to FTX, prohibited clients from making withdrawals on Thursday. The decline of FTX is bad news for everyone in the industry. Do not consider it a victory for us. User trust has been severely shaken. Changpeng Zhao, the CEO of FTX's larger rival, Binance. Regulators have long warned crypto investors of risks and expressed concern about the risk of wider financial turmoil as traditional financial firms expand their investments in the market despite little regulation. FTX, which is now reportedly being investigated by several financial authorities, was backed by major investment firms such as BlackRock, SoftBank, and the Ontario Teachers' Pension Plan in Canada. Despite potentially losing his money, Mr. Cullum said this week's events wouldn't put him off investing in more cryptocurrencies in the future. "I think there's a lot of opportunity," he said, adding that he was not investing more than he could afford to lose, and also not investing in only one type of crypto. To stay updated on crypto, please subscribe and hit the like button. Thanks for watching.